morning, students. Today I am going to continue the chapter Money and Credit. In previous video I explained you what is the meaning of collateral. Collateral means an asset that the borrower owns, such as land, building, vehicles, livestock, bank deposits, etc., and uses it as a guarantee to a lender. Then I explained you about terms of credit. In this, it refers to the interest rate, collateral and documents requirement and the mode of repayment. Now today I will explain you about various credit arrangements. There are two main categories of credit arrangements in India: formal arrangements and informal arrangements. Now, what is formal arrangements? The formal institutions for credit, mainly from the bank, cooperatives, commercial banks, loans given by the formal financial institutions are termed as formal sector loans. Now, in this formal sector loans, cooperative credit societies, how it work? The rural cooperative credit institutions in India have been organized to provide short-term and long-term finances, especially to farmers and rural artisans. The guiding principles of cooperatives are voluntary and open membership, democratic control and equitable distribution of profit, and utilization of resources. After independence, the cooperative credit societies have made considerable progress. But the working of cooperative credit societies suffer from so many deficiencies. Prominent deficiencies are lack of fund, problems of favorism, partiality and misuse by the big landlords and village moneylenders because of defective management, corrupt leadership and groupism in the villages. Then, how banks are doing work? Of all the functions of commercial banks, leading of fund is certainly the most important function. While performing this function, banks provide working capital to commerce and industry and loans to farmers for agriculture operation. Since nationalization, there has been a spectacular rise in banks, branches. In 1969 and 1980, there was a radical change in the credit policy of the banks. After that, banks have devoted considerable attention to provide credit to priority sectors such as agriculture, small artisans, household enterprises and petty service providers. Now, regional rural bank. The main aim of this bank is to extend credit to small and marginal farmers and rural artisans to save them from the money lenders. is informal sector or informal arrangements. To meet the credit requirements, especially of poor people such as farmers and the artisans in India, informal arrangements had always occupied an important place. They include moneylenders, landlords, traders, relatives, and friends, etc. Loans given by these informal lenders are termed as informal sector loans. Even today, the informal sector lenders occupy a good place in India's rural credit. It is because of the reasons that they supply credit for productive and non-productive purposes. They are easily accessible and their methods of business are simple and flexible. But all such informal lenders exploit the borrowers and indulged in various types of malpractice. What type of exploitation they do? They charge extra rate of interests. They manipulate accounts to their advantage. They force the farmers to sell their agricultural produce to them at low price. They obtain bonds and promissory notes on false paper. They give no receipts for repayment and often deny such repayment. Informal sector lenders exploit farmers and other borrowers in a number of ways. The government has therefore undertaken various steps to regulate the activities of these lenders. The share of sources of credit in rural household in India. In India, the total credit to rural household, the share of formal sector is 52% and the share of informal sector is 48%. It shows that even today, informal sector leading occupies a good place in the rural household lending. Among the informal sector lenders, the largest share is of money lender. I will take two examples of this formal and informal. First example, Nihal Singh is a farmer who owns 2 acres of land for cultivation. He is always in need of money for his farming operations. Till a few years back, he used to borrow from the village money lender who used to charge an extra interest at rate of 4% per month. Now, he has started to borrow from local traders who charges 3% per annum interest rate. But the trader has imposed a condition on Nihal Singh. According to this condition, Nihal Singh is required to sell his entire produce to the traders first after harvesting the crop. way, the trader receives his payment at the earliest and purchases the produce at low rate price from the farmer and earns huge profit. Nihal Singh's earning remains smaller because he has to sell his produce at low price under this agreement. Now next example, Dayaram is a big farmer who owns 20 acres of land. He grows multiple crops on his land. Apart from food crops, he also grows potatoes and tomatoes. He has taken a loan of rupees 10,000 from the bank at 8.5% per annum rate of interest. The loan is to be repaid in 3 years in equal installments. Dayaram has repaid the first installment of his loan after the harvest by selling a part of the crops. He has kept his potatoes in the storehouse and has received a fresh bank loan against the cold storage receipt. In this way, Dayaram enhances his income continuously by giving bank loans at cheap rate of interest. Now you have to write question and answers in your fair copy. Which sector of loan charges much lower interest on loans? How do banks play an important role in the economy of India? How do the formal and informal sources of credit differ from each other?